Well, hello, welcome to Business Incorporated live on Channels Television. Here's what's coming up on the program. Nigeria unveils a $500 million push for agricultural growth. And from job seekers to opportunity creators, can skills and innovation unlock Africa's youth potential? We'll discuss that. And it's great to have you join us. I'm Ladi Williams. Let's kick off with what's playing out with the markets that we track now. Definitely, we're seeing oil prices easing today, 0.21%. WTI crude 79.43, losing that $80 per barrel level. And we see Brent crude still holding on, but $84.57 per barrel. And we see natural gas with a pullback there. Was heading for the $3 level, but we're seeing a pullback, from those levels so far. So that's the picture right there for oil prices. Let's get a check on metals now. Definitely investors are trying to analyze what's playing out so far, especially with the U.S.-Iran war at this point. But we're seeing gold prices also slipping today as investors are weighing Middle East tensions at this point. So we're seeing spot gold also pulling back today. It was starting to pick up. That was for Monday. But for the Tuesday, Wednesday, Thursday trade, we're seeing gold again. We're seeing more sell pressure at this point, more profit taking from the previous rises that we saw before now. So that's what's happening with gold prices so far. All right, let's get a check on other stories now. Nigeria has unveiled a $500 million agriculture investment fund aimed at transforming food production in the oil-producing Niger Delta. Announced by Vice President Kashim Shettima at an investment summit in Abuja, the fund is designed to attract private capital, boost food security, and unlock the region's agricultural potential. Operating as a commercially driven investment vehicle, it will target key sectors including crops, livestock, fisheries, aquaculture, palm oil, and marine resources, with financing expected from multilateral development partners alongside private investors. So that's a big investment there expected. Let's get a check on East Africa now. We see Kenya is set to more than double its exports to Tanzania after the removal of a long-standing industrial development levy on a range of products. The breakthrough, secured after months of bilateral negotiations, is expected to unlock more than 130 billion shillings in trade, restore the competitiveness of Kenyan goods, and reverse last year's export decline. The move also marks a major step towards deeper regional integration, and that's under the East Africa Community Summit there. So, yes, they're trying to double trade with Tanzania. That's the latest right there in East Africa. Then we see Ethiopia. They've officially launched their long-awaited National Dialogue Conference, bringing together more than 4,000 representatives from across the country in a landmark effort to address long-standing national challenges. Prime Minister Abiy Ahmed joined senior government officials, diplomats, religious leaders, and community elders at the opening ceremony in Addis Ababa, organized by the Ethiopian National Dialogue Commission. The conference will see participants engage in weeks of structured discussions aimed at building a consensus on the country's key political, social, and governance priorities. All right, let's get to our first conversation now. We see Africa is home to the world's youngest population, yet millions still remain unemployed at this point. Millions, remain, trapped in that low-paying informal job, as in artificial intelligence, digital technologies, and the green economy. That's reshaping the future of work. The challenge is it's no longer just creating jobs, but equipping young people with the skills to create opportunities of their own. This year's global theme is Skills for a Shared Future. Puts that conversation in sharp focus now. Joining us for this conversation, we have an entrepreneur and a cultural strategist, Daniel Kojo-Sobo, to discuss how entrepreneurship, culture, and innovation can unlock Africa's greatest assets. That's its youth. Great to have you on the show.
Hello. Thank you so much for having me, Ladi.
Right. So,
greetings from Accra.
Fantastic. Great to have you. So this year's theme is Skills for a Shared Future. What do you believe are the most critical skills, African youths need to succeed in an AI-driven and rapidly changing global economy?
I believe that the African youth need a blend of human skills and then digital capabilities in order to thrive in an AI-driven world. When we talk about human skills or human capabilities, we're talking about creativity, we're talking about emotional intelligence, we're talking about storytelling, collaboration, and appreciation for excellence, and doing things that can compete on the global stage, on the global level, and that is what my organization EMY Africa Champions. We celebrate African excellence to inspire greatness in our young people, so that our young people will have an appreciation for hard work, an appreciation for excellence, which are very critical skills that our young people need, which is very irreplaceable even as AI advances. And then secondly, I think that our young people also need digital fluency. You don't need to be a hard coder, but you need to understand how to use the standard digital tools in order to advance your work, and also adaptability and lifelong learning, because constantly requirements for the job market is changing, and so our young people must be able to learn, unlearn, and relearn, in order to be able to survive in this forever changing world that we live in. And also collaboration. As Africans, we don't do well with collaboration amongst ourselves, and then also cross-border collaboration. And I think that those are some of the things that we need to do if our young people are going to survive in this world, especially African youth who are Africa is the youngest population, they say, because most of our population falls under the age of 25, I think about 60%. And so for us as Africans, that is our biggest, economic opportunity, and we need to take them seriously and pour into them.
Right, and it's quite interesting how, somehow it looks like Africa is actually, creating more barriers, from for its youths. At this point, they're not able to, move from one country to the other. There's also talk about, xenophobia and all of that. And some argue that entrepreneurship should be seen as a pathway, to employment, not just, startup creation. What practical changes are needed to make that a reality, for you across Africa?
I think that entrepreneurship should be taught as a problem-solving, market analysis, and business operations, and not just to start a company. If young people are taught to understand that entrepreneurship is about problem-solving, they would appreciate it would encourage them to see look around them and see problems that can be solved, and create businesses out of them. It's very heartbreaking when you see young Africans pay go look for money to pay visa connection people to travel abroad, because they are looking for greener pastures. Meanwhile, there are a lot of green pastures around us here in Africa. There are a lot of resources that our young people can tap in and create jobs for themselves and jobs for others. So I think that if we're able to, through our policies, through our education, teach young people how to look around us and solve problems, and through that create employment for themselves and others, I think that will be solved. And as well, I believe that education should not just be about theory, but we should be able to give our young people the opportunity for internship, the opportunity for mentorship. And that's what we do very well at EMY Africa. Apart from our storytelling and the excellence we award for our awards, we give young people the opportunity to be mentored by some of the great people that are within our network. And one of the things we do is that at every year we try to connect a young person to some of the people that have won an awards, have been featured in our magazine, to get opportunity to be mentored. And we also have a program we call the Generation Now program, where we believe that the young people are the now, and so we need to pour into them. And so we use this platform to spotlight the young people that are doing great things, to inspire for inspiration for other young people. But we also have programs like the entrepreneurship program and an educational program where we have young people compete for a prize. And also, we also partnered with the Peace Fest, which is an international NGO, to award $10,000 to a lucky young person last year during our awards. And this was a competition between 10 young Africans who are doing social impact projects. And the lucky one won $10,000 to invest in their project. So these are some of the things that we need to do as private sector and as government to be able to push our youth.
All right. Well, with what you're seeing so far, with efforts being made, at this point, and some of the solutions you actually prefer, where do you see the African youth in the next, say, 10 years?
I see the African youth taking charge. I see the African youth embracing the Africanness, embracing their the excellence and the greatness that resides within them. Because I always say that as Africans, we are innately great, but for a very long time we've been taught to think very lowly of ourselves, and so as Africans we always operate at the level of mediocrity because we have been taught for a very long time that we are not enough. And I think that for the work with some of the work by EMY Africa and other platforms, we'll be able to let our young people know that they are worthy, give them aspirations and confidence to be able to tap within themselves and be the great Africans that they are born to be. And like I said earlier, our population is predominantly youth, which gives Africa a lot of power. And so if we're able to pour into our youth, create policies, create a lot of opportunities for our youth, Africa is going to be a superpower.
All right. Thank you so much, Kojo. And definitely we're hoping for the very best for the African youth. Thank you so much.
Thank you so much, Ladi, for having me.
All right, let's look at commodities market now. We see Nigeria is one of Africa's largest poultry producers with 180 million birds, 1.5 million tons of chicken meat, and 15.8 billion eggs annually. Yet domestic supply meets less than 1/3 of chicken demand, while frozen chicken prices have risen more slowly than other proteins. Let's talk to Ajibola Ayodiji now. She's with Financial Directors Company. Great to have you on the show.
Good afternoon, Ladi. Thanks for having me.
Yeah, so what factors have contributed to the relatively slower increase in the price of frozen chicken compared with, the substitutes?
Okay, thank you. So for frozen chicken, I need us to understand that frozen chicken and other protein, they have different production cycles. So because of the different production cycle, for example, broiler, which is used for making majorly for frozen chicken meat, takes like 6 to 8 weeks to raise for market to market size for it to be killed and sold. Fish and all, they take like 5 to 8 months to rear, like tilapia fish and catfish. But when it comes to cattle, also it takes like more than 2 years to raise it to market value. And also goat, it takes more than 1 year. So because of the short production cycle for broiler, which is used for making frozen chicken, we see that it is the process of replenishing the supply in the market is faster compared to other source of protein. That's why we are seeing the price like not increasing the way other protein sources are increasing. That's one. And another thing is the fact that we produce like 1.5 million metric tons, million tons for production, but there's a gap between what we produce and what we consume. For example, we consume more than 2.7 million tons yearly. So the gap is being filled by importation. Even though there has been a ban on the importation of frozen chicken, there's still smuggling. It is smuggled from, especially from neighboring countries and through informal channels. So this is able to bridge the gap between supply and demand, and the competitive pressure against the locally produced frozen chicken. So this helps to contain the price of frozen chicken as against other protein sources. And lastly is the consumer income constraints. If there is an aggressive increase, there might be a change to other commodity because it has close substitutes. They can go to eating fish or other things. So these are the things that contribute to the slower increase in the price of chicken as compared to other protein sources.
All right, so given that, both products are outputs of the poultry industry and are exposed to similar production costs, what factors explain the, slower increase in the price of frozen chicken compared with eggs?
Okay, when we're talking about egg, even though both are gotten from poultry industry, eggs majorly is gotten from layers, which takes about, I think, 18 to 22 weeks for it to begin laying egg. But as I said earlier, for broiler, it takes between 6 and 8 weeks. It is ready to be consumed. That is ready to be consumed, but layer takes time. So the feed cost which is used, the overall feed cost or production cost for layer is more than that of broiler. So that's why we are seeing the difference between the price of frozen chicken and eggs. That's one. And another thing is the fact that, like I said earlier, chicken as substitute. So if you don't want to buy chicken, you can buy live chicken and kill it. You can buy imported chicken. You can buy meat. You can beef or fish. But then when you talk about egg has a little or no close substitute, and because of that, the layer farmers they have like a strong pricing power as against the boiler. So that's why we are seeing the increase in the price of egg going higher or higher than that of increase in the price of chicken.
All right, thank you so much, Ayodeji. Thank you so much for giving us those updates. We'll definitely keep tracking that, poultry industry. Thank you.
Thank you for having me. Thank you.
All right, let's get a check on the markets now. Definitely, we're seeing the NGX there down about 0.42% after the drop yesterday. Yes, it was a negative close for the market, and we see Bois Cement again dropping about 9%. It's down about 9% so far. Checking, the markets at this point, and we're seeing banks. Most of the tier 1 banks are up. So the drop we see for Bois Cement, that's countered some of those gains so far. Johannesburg Stock Exchange 1.02% higher, beating the move we saw yesterday. Let's flip over to other parts of the market now. We see the EGX 30 0.61% higher at the Nairobi Stock Exchange, closing in the green. That's for yesterday's close. Let's track Middle Eastern markets now. We see the Dubai index 0.39% lower. So the UAE is negative today at intraday, 9,797 points for the Abu Dhabi index. Let's flip over to other parts now. We see for the Tadawul just marginally down by 0.01%, and the Qatari index there still 0.13% close for the last time. All right, let's flip over to Asia now. We see US. Let's see US now. Dow Jones Industrial Average Futures, that's a lone gainer right there, up 0.20%. The tech-heavy Nasdaq is down 0.29%, still at 29,000 points, almost 30,000 at this point. That's a new level for the futures market. We'll flip over to Asia markets now. We see a pullback after that big move yesterday. It's a bigger move down, 6.37% for the Kospi and the Hang Seng Index, 1.33% high on the flip side. Let's see what's happening in other parts there. The Nifty 50 in India, that closed marginally down, about 2 basis points lower. Let's flip it out to Europe now. Let's see what's happening over there. We have Lars in Europe. Great to have you, Lars. How's it looking over there in the markets?
Yeah, Ladi, good to be with you. Well, markets here are down again, but not by much. We can actually almost say that they're moving a little sideways again if we're zooming out of the daily ups and downs and just look at maybe the last 4 weeks or so. And what's behind it essentially is, of course, a lack of fresh impulses. You know, the situation in the Gulf region for now is what it is. There's not much moving there right now. And we're also not seeing any big corporate movers either. Here's one, though, for Germany today in particular. U.S. delivery giant Uber Eats is taking over Delivery Hero, a German market leader in that segment, for 13 billion euros. So we're having a bigger transaction here. But of course, that really only affects those particular stocks, but not the rest of the market.
All right, so definitely, I know Germany didn't stay long, the World Cup, but we're getting towards the end of the World Cup, and that was a big affair, not just for football fans, but also for business. Apparently, one American brewery wanted to use the tournament to get into the German, beer market, but they're not finding it easy. What's the story there?
Yeah, Ladi, quite a story there. Anheuser-Busch is one of America's biggest breweries, and they're trying not for the first time to get their bestseller Budweiser into the German market. Now, one should know there is a little bit of history here. Eberhard Anheuser and Adolphus Busch, the two founders of the company there, they were indeed two Germans who emigrated to the U.S. in the 1870s, so just around 150 years ago, and they started that brewery brewing Budweiser, after that Jack beer that they used to like. Now that became massively popular in the US, and now that the company has merged with InBev out of Belgium 2 decades ago, they're taking another stab at Germany, arguably home of beer, but also, according to many experts, really the hardest beer market to get into. Now, what's helping the company indeed is the ongoing Football World Cup, because Anheuser-Busch is a sponsor and Budweiser is the official beer. So German fans watching on TV, they're seeing the branding everywhere, but for now it hasn't translated into sales, and many people here are saying it never will.
But why is Germany such a hard market, for companies to break?
Well, there's many reasons. One is that beer is part of German culture, and Germany has the world-renowned Reinheitsgebot, or the purity law, that has regulated ingredients and brewing processes really for centuries, and it's led to a particular taste that Germans have for their beer. There is very little tolerance here for variety, and Anheuser-Busch Budweiser obviously isn't brewed according to that law, and it is very different in taste. But it's not just that. Budweiser is also a quintessential American brand, and in today's climate, that doesn't really help. Many Germans have extremely negative feelings about the U.S. under President Trump, the country that many Germans once used to look up to, that was idolized by many, is now really being roundly condemned by a vast majority of people here, and that certainly makes a consumer product unattractive. We're actually seeing this in reactions of people to the new offering here, when one of the largest rock festivals in the country here announced that they're being sponsored by Budweiser as of next year. Even hardcore fans reacted angry and said they would no longer attend the event. So right now it doesn't look like Bud will make much of a splash here.
That's quite interesting. But is Budweiser's presence in Germany, is it still a threat to the competition there?
No, not really. I don't think so, because these German breweries, they know that they're likely not losing much business to them. However, the mood in the brewery business, that is kind of tense anyway, and that's because beer consumption is generally way down in Germany. That has to do a lot with more people paying more attention to their health. Many have switched now to non-alcoholic beer, which has been a growing segment for breweries, but growth there does not entirely make up for the drop in volume otherwise. So we've actually seen some breweries close, and we have some trying to figure out new products to win back their customers.
All right, thank you so much. Lars, definitely we'll see how the TGIF trade, if there's a difference tomorrow in Europe. Thank you.
Absolutely. See you, Ladi.
All right, let's get a check on the crypto market now. Let's see what's happening there. Definitely we see Bitcoin was trying to make a comeback, but that's been under pressure so far, trying to get back above the $65,000 level, but we did see a pullback, and it's red on the screen, 1.59% lower, 63,954. Ethereum also pulling back there, 1.88%. So I guess the Thursday pullback, maybe before a Friday move up. We'll definitely keep tracking that. Some of the headlines now: the U.S. Senate is under pressure to pass the Clarity Act before its August recess as lawmakers push to establish a comprehensive regulatory framework for digital assets. The bill seeks to clearly define the oversight roles of the SEC and the CFTC, but disagreements over ethics provisions and regulatory authority continue to delay a final vote, leaving the legislation's future uncertain. One of the headlines there. U.S. Securities and Exchange Commission, they're reviewing increasingly complex crypto exchange traded funds to determine whether they expose retail investors to excessive risk. The review focuses on products that use leverage, derivatives, and other sophisticated strategies as regulators weigh investors' protection against continued innovation in a fast-growing digital asset market. And we see U.S.-based investment manager William Blair has lowered its revenue forecast for Coinbase, cutting its 2026 projection by 12% and its 2027 estimate by 13%. The firm attributes the downgrade to persistent weakness in both retail and institutional trading activity, reflecting expectations of a slower growth for the largest cryptocurrency exchange in the United States. I guess we're not seeing that much price action, so you're not going to get much volume for most of these exchanges. But that's how most of the markets are looking today. We'll track more tomorrow. Thank you for watching. I'm Ladi Williams. Bye for now.